Hello and welcome to yet another episode of Axis Mutual Funds podcast series. So today we are going to be talking about this interesting conversation about China Fund. So actually we've seen a lot of conversations and we've done a lot of social listening, and we've seen there's a lot of interest of prospects and customers talking about, should I be invested only in Indian markets or should I also look at markets around the world? And that's where we thought, let's pick up one specific country, which is China, which has grown a lot with, a lot of AI, etc. happening all around us. So to guide us to talk about China Fund, we have Divya Menon. Welcome, Divya.
Thank you.
Divya has been a veteran in the mutual fund industry and she heads the product team in Axis Mutual Fund. So straight diving into our topic, Divya, can you tell me as to why is it important for an investor to look at other countries or global allocation as well in their portfolio?
So, Khushbu, essentially when we are building a portfolio, the whole idea of getting into multiple securities or getting into multiple asset classes is to have the benefit of diversification. So you have this old adage, right? Don't put all your eggs into one basket. It's
Absolutely.
as simple as that. Having been in India, having been a resident of India, it is but natural for us to have bulk of our investments in India. So it could be, say, equity markets, mutual fund, FDs, everything is revolving in India. But today, increasingly we are seeing investors wanting to go beyond India because they know there are themes that are currently not in play in India. There are cycles where India is moving in a different trajectory and some other economy is moving in another trajectory. So overall, when you look at your portfolio, it brings out a much better diversification. And that is where I think, like I said, increasingly more and more people are now looking forward to participating in different themes beyond India, getting that benefit of global diversification in their portfolio. And that's why it is important to consider some opportunities that may be suitable to each and every investor.
Great. I think makes absolute sense, as in you shouldn't keep all your eggs in one basket because markets cannot divert depending on how it goes. So let's come to China in terms of specific China, since we've been hearing a lot about China and their progress in AI, etc. How do you think China's economy is positioned today?
So I'm glad you got the economy first rather than just focusing on market returns, because it's very important to understand where China is in terms of its macroeconomy. So China is a large, huge country, but today, in today's time, the way Chinese economy is poised is that it's getting into a slower growth, more measured growth kind of an environment. We saw that the third quarter GDP was at 4.8%. So somewhere we are seeing the GDP settling between 4.5% to 5% kind of a range. We have seen that consumption demand has been slowing, retail sales have been slowing. There has been, in the last couple of years, we have seen there has been distress in the property market. So housing prices are on a decline. So that's still continuing, right? So it's not that everything is very hunky-dory or gung-ho. Everyone is gung-ho about China's economy. So that is something we need to understand, we need to realize. At the same time, it is important to understand that government is taking measures. Now these measures are not just stopgap arrangements. It is more, the focus today of the government is to look at more sustainable measures for long-term growth. So essentially that is not something that is going to simply push the economy into a fast growing zone. But yes, that moderation in the growth has happened, is still happening. It is important that we watch out for how these stimulus packages or reforms are going to play out in the near term over a medium term. Exports have obviously buffered growth for China, but that also needs to be seen coming into year 2026, how the truce between US and China continues or materializes. Consumption, we are not very positive on the consumption picking up soon. But that's something you need to watch out for. Some of the indicators that you would want to watch out for are the typical, the CPI, the PPI, how are the fixed investments happening in China. So these are all things we would want to look out for to really get a sense of where the macroeconomy is moving.
Got it. So you mentioned government are taking measures. So could you explain a little more to our audience as to what kind of measures are governments taking to kind of boost the growth of the economy?
Yeah, so unlike previous cycles when governments had to step in, this time what we are seeing, or the sense we are getting, is there's a lot of clear, sensible approach towards providing the push to the economy. Now, it is not something which is more tactical in nature, or you want to provide a very dramatic stimulus and have a temporary push to the economy. That's not how the government is looking at today. They are more focused on, like I said, trying to incentivize longer term growth prospects, trying to incentivize sustainable growth prospects. Now they have their 15th 5-year plan coming up for 2026 to 2030. So the idea here also is to focus on, automation, AI-led growth, healthcare system, biotech system, manufacturing-led incentives programs are being seen or are being hoped for. There are also, packages, reforms already in place to, stimulate consumption in a way. So you have, trade-in of appliances, autos, then you have some subsidies for pensioners and childcare. So all these things are happening in China today.
Great.
So these are not very quick turnaround stories, but more measured and, something with an eye for long-term sustainability.
Okay, great. I think that's about China. What do you think about like the greater China, right? Hong Kong, Taiwan. What about that? Like all of this is great for China, but these two are important parameters in China as well.
So when we say greater China, what we essentially mean is, yes, China. China in fact is a very big part, but you also try to focus on two other major economies there. One is Taiwan, the other is Hong Kong. Taiwan is a distinguished economy in its own way, where tech-led focus is very significant. So you get to allocate into companies that are tech heavy. So there are semiconductor names, names that are into technology, hardware, component manufacturing. So manufacturing led emphasis is there in Taiwan, and these are this is an economy that has attracted global investments because of the robust system it has in place in this AI led value chain or manufacturing segment. So that's an interesting piece that we get to look at. The other economy I mentioned about was Hong Kong. So Hong Kong also, I don't need to elaborate much on Hong Kong because it is a globally world-class known international finance center. So people know Hong Kong for that. It has very well established financial services segment. So we get to participate in those. There are world-class or global insurers present there. So you get to participate there. Hong Kong growth has also seen some recovery. It has been boosted by, of course, exports and also tourism. So that also is a play that you get when you look at Hong Kong. So a mix of China, Taiwan and Hong Kong, I think offers you a very good set of investment universe to play in.
Great. So this kind of helps us in understanding the scenario of China and Greater China. In fact, now let's get into about Axis China Fund, right? Could you elaborate about the strategy of Axis China Fund?
Yes, so Axis has a fund of fund, which is Axis Greater China Equity Fund of Fund. This in turn invests in a Schroders fund. So Schroders, as you know, has a stake in Axis AMC, and it is their fund that we have as an underlying in our fund of fund, which is Schroders ISF Greater China Fund. So our fund of fund invests into Schroders fund, which in turn is an actively managed fund, which will invest in China, Taiwan, Hong Kong, more quality focused offering, fundamentally driven offering. It has a very long track record. See, sitting here for me to design a China fund is difficult, right? So I don't have access to China. But when I am investing in Schroders fund, I know that they have a set established team that does the study, the fundamental research. They have local expertise understanding the political aspects, the regulatory aspects, the ins and outs of businesses that are in China, Hong Kong and Taiwan. So that's the comfort I get, and that is what I can offer my clients on.
Great. So I have a few questions on Schroders. Could you help us understand, like we know Schroders is a company, global company, but could you give us some more insight on who is Schroders? Why should our investors look at Schroders in terms of what confidence do they have on Schroders? Could you help us with that?
So Schroders, like I said, has a stake in Axis AMC. Now it's a very old, well-established asset management company based out of UK, more than 200 years old. It has, it has global presence, offices across multiple regions, multiple countries, research analysts, fund managers, specialists, ESG specialists. So they are a, established name and credible name with strategies, not just China, right? They have strategies across US, Europe, world. They have strategies, interesting strategies across multi-assets, not just equity, but alternatives and fixed income. So it's a very well established name.
Great, that helps. So I had a question there in terms of how does Schroders balance the risk and the opportunity in China, right? Because you also mentioned China is growing slowly, etc. Plus there is a big opportunity with AI. So how do they balance that?
So that's a interesting and an important question, because at this stage it becomes very critical that somewhere you need to find a balance of how much risk you are taking and how much return you want. So with the Schroders fund, they are seeking high alpha opportunities in some of the themes, like I already mentioned, say AI theme, automation theme, manufacturing theme. These are high growth sectors, but they also are on the valuation perspective or on the valuation spectrum slightly higher. So that is the high growth value chain they are targeting. Healthcare is another segment which has seen quite a bit of re-rating. Healthcare in China especially, we have seen in the last couple of years zooming up, helped by obviously government support or incentives or policy push to get into innovative drugs in immunology or oncology. They are also getting into partnership with global pharma companies, which is again helping them get deals. So all these things are positive, and we have seen re-rating in the biotech space, which is a space that Schroders is positive on. Then of course I mentioned Taiwan, so the semiconductor play comes in there. But these are high growth segments to balance the risk of high growth, high valuation. We also have seen that Schroders has invested in, say, commodities or global miners, to be specific. So somewhere in a world setting where volatility is given, this kind of acts as a hedge. So it's kind of a balancing act or investment from their end. They also have some defensive plays, like say exposure to insurers or exposure to consumption or consumer segment. So we are not very optimistic about consumption growing, but yes, there are some select plays on consumption where the fund has participated. So that kind of balances out the risk.
Great. So you've been mentioning manufacturing, you've been mentioning AI, you've been mentioning internet. You know, these are all very exciting themes that, you know, today's generation and all of us are kind of living in. So how does our fund kind of capture this market? How is it positioned? Is it positioned to have all of these themes in the fund?
Like I said, the fund that we are investing in, the Schroders fund that we are investing in, is an actively managed fund. So at this point in time today, Schroders team is positive on these themes that you mentioned, right? Be it automation, be it AI, be it manufacturing. These are all themes that they are positive on. These are also themes where, you know, China is in the forefront, right? We saw, right, early this year there was competitive name in the AI space that zoomed up from China, and suddenly a lot of interest moved in there. We have seen government also supporting AI-led, automation-led plays. So we get to play that part from China. We get to participate in that innovation story that is coming up in China. And that's how the fund is focused. And like I said, it's an actively managed fund, so it always tries to seek balance between these themes that are currently in play and also some defensive plays where it's seeing valuation opportunities. So incrementally we may not be participating significantly in those themes because we are already allocated as per our investment thesis into those themes.
How does the fund manage currency fluctuations? We've seen a lot of currency fluctuations of late. How does the fund of fund structure manage this, as in for the investors?
So Khushbu, the fund of fund structure does not try to hedge any, you know, currency exposure and all. The beauty of fund structure today is, the one that I am offering is, it is like any other fund that you get to invest in domestically. You invest in INR terms in this fund, then this fund converts it into USD, invests it in the Schroders fund. Schroders fund's team will then invest into, say, a China, Hong Kong, Taiwan, as per their strategy. So technically we are not doing any hedging, but we have seen over a long history for India is that typically against a USD there is a depreciating pressure, so that actually adds on to your investment returns. So in a way it works out positively, but there is no way for you to really hedge your currency exposure. That's something that you take, but you're not playing this opportunity for currency, but you're playing it for the equity potential gain that you get.
China has. Is this looking like a tactical approach for investor to keep him in the portfolio, or this is like a core portfolio holding that he should have?
So when you look at investing globally, you would want one part of your global investment to be as diversified as possible, investing across developed market and emerging market, and you could also be a little aggressive in your global allocation, and that's where some thematic allocation comes. Okay, so if I were to break the global investments into core and satellite, your core global investments typically should ideally be much more broad based, you know, taking into exposure across sectors, across countries, across themes. Now this will be a satellite kind of an allocation because this is focused on a specific region. a region like China, a little bit of Taiwan and Hong Kong. So that is something you need to keep in mind when you are creating your portfolio. That it's important to have global exposure. A country like China has a very less or little correlation with developed markets, or even India for that matter. So that adds the diversification beauty to your portfolio. But at the same time, it is focused on a specific region. So that can form a satellite part. Now, should it be a tactical allocation or not? I think it's really difficult to answer when should one invest into a specific play and when should one get out. A systematic approach is always the best approach, I personally feel. But yes, if there are any pullbacks in the market, or if you see markets are correcting significantly, that gives you tactical opportunity to invest a little bit more. But yes, as a practice, it is very prudent to have a staggered allocation, systematic allocation happening to global investments.
So one more follow-up question there is, how long, like say I want to invest, how long should I be invested in this economy, right? What should I look at in terms of signals for me to kind of understand that, okay, this is the right time to get in, this is the right time to get out?
So, of late we have seen a lot of interest in global investing. Unfortunately, because India did not perform, but other parts of the markets did. But that should not be the thesis of your investments, right? So that is definitely not something that should propel you to invest. But if you look at Chinese market, understand that it also goes through cycles, right? 21, 22, 23 was a very bad equity market cycle for China. 24, 25, especially after September 2024 till date, 50% rise in Chinese market has happened, and that should not be your reason to invest in China. But if you are willing to look at global investments, willing to look at China, then I would suggest be patient, have a longer investment horizon. Just like in Indian markets for equity investments, we say, you should be a long-term investor. That goes for Chinese equity market investments also.
So, give me 3 reasons why should I, me being the investor, look at investing in this Axis China FOF fund.
Okay, so firstly, like I began today's session is saying that global diversification is important. We have hopefully invested enough in Indian markets. We should continue investing. It's our domestic country. But there is merit in having some part of your investments going globally. China, like I said, is kind of very less or low correlated to Indian equity markets or global developed markets. So that again adds a diversification benefit to your portfolio. And finally, as a fund of fund offering, established track record of the underlying fund is what you get here. An actively managed fund is what you get here. And a fund of fund also, I should add, I missed adding this, was that from tax perspective, it is important to understand that this global offerings that we have, after 2 years, they get the benefit of LTCG, which is 12.5% of taxation.
Oh, great.
Anything less than 2 years, if you are holding for less than 2 years, then it's taxed as per your tax slab. So, if, like I said, you need to be a long-term investor. So, if you have a long-term investment history here, then you end up with a decent tax efficient mode of investing into global funds.
So, for all our viewers who are keen on investing in this product, what's the simplest way for them to kind of look at and invest in this product?
So I would say, like any other mutual fund that you invest in at today's point in time, fund of fund investing in overseas or a global fund is also akin to that. So you just have to fill in your application in the same manner and invest in this fund. Although it is global exposure, you are investing in INR terms with the same documentation that you require for domestic funds. Couple of things to remember is that this does not come under LRS limit, right? So this is just like your mutual fund investments.
Okay.
Other global securities, when you invest in, it goes via LRS route. This does not.
Okay.
Taxation I already mentioned, yeah, so the ease and convenience of investment is something that helps you.
Could you elaborate a little on LRS? There might be people who might not understand that.
So, so there is a limit set by RBI when you want to invest in overseas securities. I think it is 250,000 USD, if I'm not wrong. So there's a limit set by RBI, and you need to get that investments done within those limits. So there are, you know, official routes of investing via LRS through banks you can do, but because this does not fall under the purview of LRS, it is just like any other mutual fund investment.
Great. I think that was a great conversation. We covered most of the points. But before we end, I have like a quick rapid fire round to kind of just summarize the entire, and these will be like quick short answers. So first question, China growth story, opportunity or a risk?
I think I'll go with opportunity for a long-term investor. Let me add that.
Yeah. Disclaimers are always added by us. Okay. AI or advanced manufacturing, which theme dominates?
I think AI, because there's so much of investments that have happened already in AI, and we just want to see the fruits of it. So let me go with AI.
Yeah, scary to kind of think about AI.
But all of us are using AI, right? So there will be some amount of maybe a lead or lag, but definitely a useful technology.
For sure. Okay. Best way of Indian investors to think about China exposure, tactical or strategic? I think you covered that, but
yes. So keep it strategic.
Great. One word to describe China's investment cycle today?
I would say mixed. Be careful, but China being China can offer you a lot of opportunity as long as you are aware that it's an economy that has its own way of functioning, but gives you a good amount of opportunities, interesting opportunities. You balance it out.
Great. And if you had to explain Axis Greater China FOF in one line to our viewers, what would it be?
So, investing in China via Axis Greater China Equity Fund of Fund is a simple, convenient, efficient way of investing in global opportunities.
Great. I think we've had a great session, Divya. Thank you so much.
Thank you so
covered
much.
China very well. And I definitely will go and invest in China because I see a lot of potential of AI and semiconductors and multiple other things like manufacturing, etc. So thank you guys for joining us, and we'll be back with another podcast series and an episode very soon. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.